someone asked if I could do a Confluence video. One of my other videos I kind of did, I think it was in the trade recap. I kind of went a little bit into like how I trade with like marking out session times or fair value gaps. And this video is going to be more like an in-depth tutorial of how I understand and know my Confluence and how to use it to enter and exit trades. I remember when I first started to trade, which was like 3 years ago now, which is crazy to say. Um, I remember I had like a long list of all the indicators or like strategies I would use to just enter a trade. And now I'm realizing, like, as I'm trading more and more, effectively, consistently, that the simpler your strategy for trading, especially with like something like futures, where it's a very volatile market, um, the simpler your strategy, it's actually easier to make a decent and well-rounded trade and maintain like a good risk to reward. So, um, I think on this channel, I will also post like this. This is like all I use. This consists of entries and exits of trades. I'll probably put this as a post so that you guys can go back to this video and you can always go back to the post and refer to it when you're making your own trades if you want. Um, this also isn't any sort of financial advice whatsoever. This channel is kind of like, you know, I don't know, like a physical diary, like a video diary that I can have to look back on when I do make it. And I've seen other people like do this with their channels, and I think it's pretty cool. And I think it's also cool to motivate other people that it's possible. So, yeah, without further ado, let's get into it. So, the first thing on this list is I like to mark out my previous week high and low. Now, as you may have guessed, I trade MNQ like always. So, first thing I like to go do is I like to go on the 1 week time frame. 1 week time frame, I like to mark out previous week high and low. And as you can see here, that is what I did. This is the high of the previous week. This is the low of the previous week, and we're looking at this long body of this blue candle. The second thing I like to do is I like to look at the previous day low and high. So I go onto the 1 day time interval, and our last day, which was the 27th, was this blue candle right here. And since the market already closed for today, this is why a new candle is forming for tomorrow. But this was the candle on the 27th. This is the high, and the low was actually within the range of the 1 week high and low, so I actually didn't mark it out. You could if you wanted to, but like I said, less is more, especially when trading. So I marked out the high and I took note of where the low was. I also wanted to note that this day candle was actually within a fair value gap of this week, of this previous week. So I just want to take that into note. And this was when the market was, moving today, earlier this morning. So there was like a fair value gap that this candle was moving inside of. So I wanted to take that into account as well. The next thing I do is I like to go into the 1 hour time frame. And because I primarily trade New York session, um, I'm not going to be marking out the high and low of the previous New York session, but I will be marking out the high and low of Asia and London session. So, um, if you can tell, I'm actually missing London low, and there's a reason for it. So, um, let's see here. Let's first consider what's going on. So, Asia high is marked out right here. Why? Well, Asia actually opens at 4 p.m., which is 1600. So this was the high, and Asia low, I believe closes at 1 a.m. Yeah, it closes at 1 a.m. So it's this black candle right here, and this was Asia low. Then London opens at um, let's see. London opens at 1 a.m. and London, I'm not sure why. Interesting. So London, alright, sorry about that. So London opens at 3 a.m. Eastern time and closes at noon Eastern time. So even when the New York session is playing out, London session kind of overlaps. So went ahead and marked out London low, or sorry, London high, and London low was actually like within um this range. So I didn't actually mark out London low because it was already taken out. The next thing that I would consider doing is going on the 4 hour time frame. And 4 hour time frame, I like to mark out any points of draws on liquidity that there might be. So I marked out like the all-time highs on the 4 hour, and I also marked out this wick right here. I knew that it probably wasn't going to go all the way down here, but this definitely was a draw on liquidity that the market would have gravitated towards, so I decided to mark it out. And um, on the 4 hour, oh yeah, so this is right, the 1 week fair value gap that we noticed, by the way, right here. Um, but on the 4 hour, I noticed that there's a little gap right here. I didn't mark it out because it would have been more significant on the 5 minute for a fair value gap, but I did, note that as always. And then I go over to the 1 hour, see if there's any liquidity or, fair value gaps or anything. And again, we're kind of seeing this gap formation expand as we get lower on the time frames. And these candles weren't here yet, of course, because New York was just about to open. And when New York was playing out around 8 a.m., there was a 1 hour fair value gap that formed right here. So this is what this colored box is describing. This was a 1 hour fair value gap. And so I marked out my 4 hour and 1 hour fair value gaps and determined any points of liquidity. The only point of liquidity that I had before the market opened was the high and low, or, the high here, represented by this orange line, and drawn liquidity here. And so now I can finally go to my 5 minute and, where are you? There. This is the gap that I was talking about that would definitely form during the 5 minute, right here. This was a fair value gap that I intended the market to, go towards even if it wasn't going to fill it. And the last thing I would look for is any SMTs. Today I didn't really see any SMTs on MES, so I don't have any marked out. But if I were to find an SMT when, the market traces or reverses, I would, mark out where the SMT is. And this is all that I use to like enter a trade. Like these are the main points. Now when I'm actually entering a trade, I like to go on the 1 minute and let me see if I can find um, where I entered and exited trades today. There we go. So I took 4 trades today. They were kind of just little scalps, but also this is a new Top Step account. I have 2 now. So this one is now. I don't know why it doesn't say it's following, but this is a follow account of the other one I have. And today we did make a profit of just over 600, and this is how I did it. So we went on the 1 minute time frame, and this fair value gap, this huge 1 hour fair value gap, wasn't at all full. We were kind of having like a consolidation period right as the market opened, and I was just gonna wait. And the market opens 9:30 a.m., right? 9:30 a.m. comes around, and we have this huge Doge candle forming, and that's one of my confluences is a Doge candle. It signals a great reversal strategy. So what ended up happening with this specific trade is I saw this Doge candle. Alright, so after a Doge candle, what am I looking for on the 1 minute? I'm looking for either a 1 minute or a continuation of the reversal. So we have a Doge candle, and I'm wanting it to reverse, right? I'm wanting it to go bullish. It goes bullish, so that's a continuation. Now I'm looking for, okay, will this candle or the couple candles after it pass a, what is it, a fair value gap or order block, whatever you want to call it. This is our order block, fair value gap, whatever, right? This candle strongly closes above it. So now I'm like, okay, we are going on a bullish trend. Now that we're going on a bullish trend, I want to see the market continue above this previous breaker block that I had. It does. Has a continuation of this, these Doge candles. It doesn't go any lower for sure. And, after this black candle formed right here, we did have a new fair value gap right here. And this was kind of my support line. I didn't want it to go below this, and it didn't. So then I decided to enter when I had, at least two candles closing into this 1 hour for value gap. So I entered right here, not this blue candle, but this black candle, like right in between them. I entered, and I believe I put in two contracts. And when I put in two contracts, I decided to um, trail my stop loss, of course, when the market was moving up. But I decided to put my stop loss here, just below this fair value gap, just in case, it had some movement if it would to wick below this fair value gap. And so I decided to close this trade just below the highest point of this 1 hour for value gap, just in case it wicked it, as it, basically did here. That's where I exited this trade. And I believe off of this trade, I made, this was my biggest trade of the day. I believe I made close to 300. And all the other trades, the three other trades, were of course less. They were around 100 each. And, I used the same kind of concepts when I entered these other trades. So that's kind of the gist of it, how, I enter and exit trades. When I'm exiting trades, I like to use, either if I'm entering or within a fair value gap, I want to use the high or low of that fair value gap, because the market will probably reverse off of it for a correction, and you don't want to be caught in the correction of a trend. That's really how I exit trades. And when I'm entering trades, like I want to gravitate towards liquidity, gravitate towards fair value gaps. If there's a Doge candle present, that's awesome. The higher the time frame the Doge candle is present, the stronger the reversal may be. So I believe I caught so this is on the 1 minute, right? And I think it was on the 15 minute that I saw the strongest Doge candle. Yeah, the strongest Doge candle was right here, this blue one. Or you could even consider it further back here, right? This big blue Doge candle is signaling a reversal from this bearish trend right here. So that's pretty much my confluences. I mean, that's pretty much all I do. And you know, the more you do it, the better you get. And yeah, it's a very strong commitment to, wake up early in the morning and do these things every single day. But the more you do it, the better you get, the better confidence you have when entering and exiting trades. Um, the more you're like looking at the charts, the more you can identify, um, what's happening on the charts. Because when you first look at the chart, when you're an absolute beginner, you don't know what you're looking at. It's just a bunch of candles. You have no recollection of what the pattern is, but you know, the more you learn these things, the more you continue to watch, helpful videos or read about how the stock market moves, the more you'll learn and the more opportunities you have. So this is the Confluence video. I hope you enjoyed. This, consisted of previous week highs, previous day high and lows, trading sessions, fair value gaps. Didn't cover too much in SMTs, only because I don't use them very often, but when I do, they are crucial to a retracement or a reversal. Um, and, you know, fair value gaps, that's pretty much all I use, or draws on liquidity. So let me know if this was helpful at all. Um, that's like the simplest way I could break it down, honestly, because that's what I do in the morning. Um, but yeah. Um, yeah, I think that's pretty much it. Tomorrow there will be a trade recap, so watch out for that. Today there wasn't. I had something going on where I totally spaced out and didn't do a trade recap. But tomorrow there will be. Monday I didn't have one because I was taking a college exam, so I was studying all morning for that. I didn't even place any trades. But yeah, all of this week, gonna cover more concepts and trade recaps. So hope you enjoy. See you tomorrow.